Bitcoin is the original cryptocurrency that started this entire industry in 2009. It's been called digital gold, a hedge against inflation, the future of money, and a speculative bubble. After nearly 2 decades, Bitcoin has survived countless predictions of its death, regulatory crackdowns, market crashes, and competing technologies. In this updated 2026 guide, I'll explain exactly what Bitcoin is, how it works, why it was created, what makes it valuable, how it's evolved, current adoption and use cases, the risks and criticisms, and whether it still matters in today's crypto landscape. Let's dive in. Bitcoin invented cryptocurrency and remains the most secure, decentralized, and widely adopted store of value in crypto. Created by the mysterious Satoshi Nakamoto in 2009, Bitcoin solved a problem that had stumped computer scientists for decades: how to create digital money that can't be copied or double spent without requiring a central authority, like a bank. The solution was blockchain technology combined with proof-of-work consensus. At its core, Bitcoin is a decentralized digital currency. No government, company, or individual controls it. The network runs on thousands of computers worldwide called nodes. Anyone can run a node and help maintain the network. Transactions are recorded on a public ledger called the blockchain that everyone can verify. This transparency and decentralization make Bitcoin resistant to censorship and seizure in ways traditional money isn't. The blockchain is simply a chain of blocks containing transaction data. Every 10 minutes on average, a new block gets added containing recent transactions. These blocks link together cryptographically, creating an immutable record going back to Bitcoin's first block in January 2009. Once a transaction is confirmed in a block and additional blocks build on top, reversing it becomes computationally impractical. This permanence gives Bitcoin transactions finality that electronic payments lack. Mining is how new blocks get added and new Bitcoin enters circulation. Miners are specialized computers competing to solve complex mathematical puzzles. The first miner to solve the puzzle gets to add the next block and receives newly created Bitcoin plus transaction fees as reward. This process secures the network because attacking Bitcoin would require controlling more computing power than all honest miners combined, which is prohibitively expensive. The mining reward started at 50 Bitcoin per block in 2009 and halves, approximately every 4 years in events called halvings. The most recent halving occurred in April 2024, reducing the reward to 3.125 Bitcoin per block. This controlled supply issuance means Bitcoin has a hard cap of 21 million coins total. No central authority can print more Bitcoin, unlike government currencies where money supply constantly increases. This fixed supply is fundamental to Bitcoin's value proposition as digital scarcity. Only 21 million Bitcoin will ever exist. As of 2026, over 19 million have been mined, with the final coins not being created until around 2140. This scarcity, combined with increasing adoption, creates the economic case for Bitcoin as a store of value similar to gold, but with properties superior for the digital age. Bitcoin transactions work through public and private keys. Your Bitcoin address is derived from your public key. Think of it like an account number you can share publicly. Your private key is like a password that must be kept secret. It cryptographically signs transactions, proving you own the Bitcoin at that address. If someone gets your private keys, they control your Bitcoin. This is why secure storage through hardware wallets or proper key management is critical. Sending Bitcoin is simple. You specify the recipient's address and amount, sign the transaction with your private key, and broadcast it to the network. Miners include your transaction in a block, and once confirmed, the recipient has access to those funds. Transaction fees vary based on network congestion. When many people are transacting, fees rise as users compete for limited block space. When activity is low, fees can be just a few cents. Bitcoin has evolved significantly beyond Satoshi's original vision. The Lightning Network, a Layer 2 solution built on top of Bitcoin, enables instant, nearly free transactions by moving most activity off the main blockchain. Users open payment channels and can transact unlimited times, with final settlement happening on the base layer when channels close. Lightning makes Bitcoin practical for everyday purchases rather than just large value transfers. Taproot, activated in November 2021, was Bitcoin's most significant upgrade in years. It improved privacy, efficiency, and enabled more complex smart contract functionality. While Bitcoin's scripting capabilities remain limited compared to Ethereum, Taproot expanded what's possible, enabling innovations like multi-signature setups that look like regular transactions, improving privacy for all users. Adoption has grown from cypherpunk experiment to mainstream financial asset. Major companies hold Bitcoin on their balance sheets. MicroStrategy owns over 150,000 Bitcoin. Tesla held significant Bitcoin, though they reduced holdings. Pension funds and endowments have allocated to Bitcoin. Countries like El Salvador adopted Bitcoin as legal tender, though implementation has faced challenges. Bitcoin exchange-traded funds launched in the United States in January 2024, making Bitcoin accessible through traditional brokerage accounts. These ETFs saw massive inflows, bringing institutional capital and making Bitcoin investment available to those uncomfortable with self-custody. The ETF approval represented regulatory acceptance after years of rejections. However, Bitcoin faces ongoing criticisms and challenges. Energy consumption from proof-of-work mining is substantial. Bitcoin's network consumes electricity comparable to entire countries. Most mining uses renewable energy, but the absolute amount remains concerning for environmental impact. Proof-of-stake alternatives use far less energy, though Bitcoin's community argues proof-of-work's energy expenditure is what secures the network. Scalability limitations persist despite Lightning Network progress. Bitcoin's base layer processes only a few transactions per second. During high demand, fees spike and confirmation times slow. While Lightning helps, adoption remains limited compared to base layer usage. Competing blockchains offer higher throughput at the cost of decentralization trade-offs Bitcoin refuses to make. Volatility makes Bitcoin challenging as a medium of exchange or unit of account. Prices fluctuate dramatically. Volatility makes Bitcoin challenging as a medium of exchange or unit of account. Prices fluctuate dramatically. Bitcoin experiences multi-year bull and bear cycles with major price swings. This volatility is normal for an emerging asset, but limits practical use as everyday money. Regulatory uncertainty creates risks. Governments worldwide are still determining how to regulate cryptocurrency. Some embrace Bitcoin, others restrict it. The United States has moved toward clearer regulation, but debates continue about taxation, custody requirements, and restrictions. China banned Bitcoin mining and trading, though peer-to-peer activity continues. How major economies ultimately regulate Bitcoin affects adoption and value. The original use case of peer-to-peer electronic cash has largely shifted toward digital gold and store of value. Most Bitcoin holders treat it as an investment rather than spending it for purchases. This evolution reflects Bitcoin's strengths in scarcity and security while acknowledging limitations in transaction speed and cost. Other cryptocurrencies better serve payments while Bitcoin excels at being digital property resistant to seizure and inflation. Bitcoin's security is unmatched in cryptocurrency. The network has operated without downtime or successful attacks for over 15 years. The hash rate, measuring total mining power securing the network, reached all-time highs in 2024. No alternative cryptocurrency approaches Bitcoin's security budget and decentralization. This security and track record make Bitcoin the safest bet in a risky asset class. Decentralization remains Bitcoin's core strength. No company controls Bitcoin. No CEO can change its rules. No government can shut it down. Development happens through open-source collaboration, with changes requiring broad consensus. This decentralization has downsides in slow development and difficulty implementing changes, but provides resilience against attacks and co-option that centralized systems lack. From an investment perspective, Bitcoin occupies a unique position. It's simultaneously the most established cryptocurrency and among the most volatile assets. Historical returns have been extraordinary, but came with drawdowns exceeding 80%. Past performance doesn't guarantee future results. But Bitcoin has recovered from every crash and reached new highs each cycle so far. The case for Bitcoin as digital gold argues that in an increasingly digital world, value storage should be digital too. Gold's physical properties made it money historically. Bitcoin's digital properties, finite supply, and censorship resistance make it superior for the internet age. As more wealth becomes digital and governments increase money printing, demand for scarce digital assets could drive Bitcoin adoption and value. The case against Bitcoin argues that it's purely speculative with no intrinsic value, uses excessive energy for limited throughput, and will be replaced by superior technology or government digital currencies. Critics note that most claimed use cases haven't materialized at scale, and that Bitcoin primarily functions as a vehicle for speculation rather than solving real problems. My honest take is that Bitcoin has proven more resilient and valuable than skeptics expected, but faces genuine limitations preventing it from being everything believers claim. As digital property with guaranteed scarcity, Bitcoin serves a real purpose as a hedge against monetary inflation and censorship. The security and decentralization are unmatched. However, it's not becoming everyday money. Environmental concerns are legitimate, and volatility limits broader adoption. Bitcoin will likely remain relevant as digital gold rather than becoming the primary global currency. If you found this updated guide helpful, make sure to subscribe. In the next video, I'll explain Bitcoin ETFs, how they work, their advantages and disadvantages, and whether they're right for you. Thanks for watching, and I'll see you in the next one.